Welcome back. Let's look at what's happening in the FNO space in our segment FNO 360 powered by 5paisa. To begin with, Nifty futures. The Nifty is up nearly 0.9%, hovering above the 23,900 mark there. We're seeing a nearly 4% jump in the June series for the Nifty, and that's important because there is a active rollover happening. We started the day with nearly 45% rollover, so there's an increase in rollover happening with the open interest jump which is coming in the June series. In Nifty Bank also, we started the series with around 49% rollover. Today we're seeing nearly 4% jump in open interest coming there. The Nifty Bank up 1.48% in today's trade. If you look at the constituents of Nifty future, then look at what's happening in open interest change, you're going to see that 24,000 is a very important mark with a strong build-up of put positions in that, followed by 23,900. But the entire distribution chart, if you look at it, you have some resistance which is coming in at 24,004 for the Nifty at that point in time, and at this point in time you have 24,800 where the call open interest is much higher than the put open interest, which would change over eventually in the next few hours of trading, whereas more put writing comes into play. But today 24,000 breach seems unlikely at this point in time. Look at what's happening in the futures market, where the active futures Aisha is which is up nearly 5.23%. You have HPCL is up nearly 4.67%. Your GAIL up 4.5%. There's some shorts which are getting covered in GAIL and HPCL. Aisha is up on the back of long build up which is there. In futures losers, you have stocks like Info Edge, where there's a short build-up happening, stock down 5%. Colgate is down 2.68% of the after the earning. There's a long unwind which is happening. Oil India is seeing a long unwind with 2.35% down in today's trade. Open interest gainers include stocks which are active today. Bajaj Holding, a long build-up. Interglobe is seeing a long build-up. There was a block deal that also happened in Interglobe. The 7.5% jump in open interest which is coming in. Cummins is seeing a long build-up with nearly 6.4% jump in open interest there. In the losers side, on the open interest front, you have Sona BLW, which is seeing a short covering. Godfrey is seeing a short covering, and LIC, after a good numbers that came in last week, the company, the stock is seeing a short covering with open interest down nearly 7% in today's trade there. But let's look at most active ones. You have Aisha 7400 May call, 21 rupee premium jump there to 62. You have 1.33 lakh contracts getting added in that. The stock currently at 73.72, up 373 rupees. So 7400 seems to be some bit of resistance coming in for Aisha. But if you look at the put side, you have stocks like an SGFC 780 May put, where the premium is down nearly 10 at 4.25, and the open interest is up nearly 4.69 lakh contracts in today's trade. Stock hovering about the 781 mark at this point in time. And look at what the market is also doing at this point in time. It's up 0.92%, hovering about the 23,937 is the thing. IT index is just flat. Banking is leading the rally today, 1.5% jump, and you have the broader markets like a small cap 250, which is up nearly 1.26%, and mid cap 150, which is 0.78%, which is there. So moving on to we have going to a company specific. We have Nissan Joseph, who is the CEO of Metro Brands, joining us. Mr. Joseph, hi. Give us a sense of the kind of volume growth that you're seeing, and are you seeing some challenges with respect to the kind of impact, which is geopolitical impact, which is coming in, and changes in the kind of spends which are coming in?
Hi, Sajid. Good morning, and thanks for having me. If I reflect on last year, consumer demand picked up steadily through the year, and you can see that in our numbers through the years. It capped off a year of a 15% growth, 20% coming in the last quarter. Having said that, I think we started seeing some early signs of potential input hikes, with raw materials and freight, obviously, And so, but we've been able to mitigate against that quite well. So in the short term, we don't see any impact from it. However, if that crisis continues and it continues to drive things like oil prices up, it continues to drive things like or lower the money coming in from expatriates around the globe into India, those things will have an impact. But I think bottom line is that Metro is well prepared to mitigate any short-term risk that we see.
Impact going to be from a demand point of view or from a cost escalation or point of view for you?
Yeah, I think if there was an impact, it would start off with input cost rising, though we mitigated most of that for the next 6 months, right? And then, of course, that leads to having some demand softening if it's a long, persisting situation. So far, we haven't seen it yet, but, we always stay alert. We prepare for the worst and hope for the best.
Hi, Nissan. This is Harsha. Give us a sense. I just want to take a step back, try and get your perspective. Q4's numbers were extremely strong for you. One, what's the outlook like for FY27? Can this kind of growth number, can the kind of performance that you've put out in Q4 continue to play out going forward as well? What's the take?
I think on a long-term basis, Hirsch, we look at having a sales growth around 15%. With our EBITDA hovering in the high 20s, hitting almost 30%. Those are two numbers we're comfortable with at a longer period of time. Having said that, though, it's not always going to be every single quarter, right? I mean, some quarters you're going to see a blip up, so you're going to blip down, right? And then, of course, in India, we have a lot of, whether it's wedding dates shifting, whether it's festival dates moving, there's a lot of action happening between quarters. But on a long-term basis, that's the number we've guided to. It's also historically, Hirsch, that's a number we've consistently performed to. So we feel very good about those numbers being a number that we can bank on going in the future.
And what were the levers for Q4 that played out for you in particular?
Yeah, I think one was obviously demand was good, right? And we also saw a lot of new customers come into our banners, our multiple banners across the country. And, that was driven largely in part by some of our marketing efforts that we've been putting into play. So I think it's investments in marketing, it's investments in our CRM technology. It is rising consumer demand. I also think that, there's probably a little bit of a shakiness in the unorganized market. That's creating a little bit of crunch there. So consumers are migrating a little bit more to the organized markets.
From a store expansion strategy which you have, what is the kind of expansion plan that we have for FY27?
Yes. So last 2 years, we've seen the highest growth for Metro Brands in a new store opening. But here's the reality, Sajid. It's not a question of how many stores we open. What we want to do is open profitable stores, right? And sometimes market conditions, rents might be a little bit too high. They might not be the most favorable locations. So real estate is both a science and an art, with location being the driver. And we want to make sure that we get the absolute right location because we sign these locations for, almost a decade at a time. So if you don't get that right from the first year, it's going to be a long 10 years ahead. The good news is, we have the capital in the company to expand. We have the multiple banners that we can look at expanding. So it's not a question of not having our ammunition for it. It's a question of finding the right targets that make sense for us, both in the short term and in the long term.
What was the same store growth like for you?
Yeah, so we don't disclose, we don't break out our numbers, Ajit, by the different segments. But I can tell you loosely, 30 to 40% of the total sales growth you see is coming from like to like. The other 30 to 40 is coming from new stores, and the remaining is coming from an annualization effect of stores.
What would be the breakup between stores and online? Have you seen a traction for online and modern trade, which coming into?
So the good news is our online business continues to have high double-digit growth. Last quarter, it clocked a 53% growth. And the better news is it's not coming at the expense of our brick and mortar stores, right? So consumers still want to shop in a brick and mortar environment while they still enjoy the convenience of online shopping. And we as Metro Brands are well positioned on both channels of consumers to take advantage of wherever they want to shop, whenever they want to shop.
Nissan, give us a sense of this. With regard to a revenue per square foot, I see that it's at 17,300 rupees versus 18,200 rupees same time last year. My sense is that it's also because of stock count increase that you've seen, which is around 15 odd % in terms of stock count increase. But talk to us about the vintage stores. Revenue per square foot in vintage stores, has it gone up?
Yeah. So let me answer it two different ways. One is, to address your question, the square footage is highly impacted by new stores in two ways. One is the mix of stores that we have, right? So if we open stores that don't have a normal productivity, as that's our average, it's going to pull down the average. If you open a high group of stores that have a higher degree of higher number relative to average, it's going to pull up our numbers. Good example is Crocs runs really high. If you open a lot of Crocs stores, you're going to see that average square foot move up, right? So it is really a mix of stores. The quarter for quarter is we had a growth last quarter on a sales per square foot basis. So it's not, sometimes you blip up and down, like I keep saying, right? I think we started off the year kind of soft, and then we picked up momentum through the year. Then, of course, you have all new stores and all the banners seldom come out and do more than the average of that particular banner. So if a new Metro store opens up, it highly likely doesn't do as much sales per square foot as the average Metro store does. And that's true for our Mochi and our Walkway and all those banners. So it's a double effect that you have. One is the new stores depends on the mix of stores that you open, and secondly, they come in at a lower average anyway till they mature.
Nissan, can you also give us a sense of how Clarks is shaping up and the scale-up plan for there? And also, if you can give us a sense of the mix between your own brands and third-party brands?
Sure. Well, Clarks is shaping up really well. We're very pleased to see how good it's doing in our stores. Right now, we have it in about 350 of our Metro Mochi doors, and its online presence is doing very well. We just launched the men's collection a few weeks back, and that has also been performing well. And we hope to see that continue. Later on in probably Q3 of this year, you'll start to see us open Clarks stores, mono-branded stores. So that's the runway for Clarks growth. In total, Metro sells 70% of our own brands. So that would be Metro Mochi, the Da Vinci brand, the Walkway brand, the J. Fontini brand, right? So 70% of all the sales we do is internal, is our own brands. I don't call them private labels because private labels is often associated with a lower cost, but it's really our own brands. And then 30% of it is external brands, which is a combination of brands that we just sell in our stores that we don't have any strategic relationships with, or we have strategic relationships, such as the one with Crocs or Clarks or Fila, and so on and so forth.
Nissan, it was a pleasure talking to you today and getting a perspective on the entire operations of yours. Thank you very much. That was Nissan Joseph, CEO of Metro Brands. We'll step into a small break and we'll come back with more. Back here watching First Trade, and we have now joining us Mr. S.K. Bajpai, Senior VP Finance and Legal and CFO at GSFC. Mr. Bajpai, hi, thank you for joining us. Give us a sense of how the Q4 numbers has been and the impact of crude, how you've been able to absorb it.
Yeah, that's correct. Good morning and thank you for having me in your show. Financial year 25-26 has been a year of resilient performance by the company. Despite the challenging global environment, geopolitical instability, and sharp raw material price increase, the company delivered strong financial results and improved profitability. Both our fertilizer and industrial product segment recorded significant performance during the year, supported by disciplined execution and operational agility. If you say consolidated numbers, sales improved by 15% to 10,945 crores. PBT and PAT both increased by 14% to 861 crores and 673 crores. As you rightly said, that crude prices are going, and whatever the derivatives of the crude are there is a sharp increase in the prices, like benzene, what is used for the caprolactam production. So that is absorbed by the company by scaling up the finished good prices also, like caprolactam. If you see caprolactam benzene spread, that is improved to $670 odd per metric ton during quarter 4, and presently it is more than $800 per metric ton at the current time.
Mr. Bajpai, just talk to us about what this does in terms of outlook, both for Q1 FY27 as well as FY27 full year, if things wouldn't change or improve materially.
Yeah, despite the raw material prices increase, because fertilizer business is not having that much margin, so it is governed by the government regulations, subsidies provided, whatever the prices of natural gas and other raw material increases. So that hardly impacts the company. But as far as IP product segment is concerned, the industrial product, we are in a position to generate good numbers in the quarter 4, and that will continue in quarter 1 also, and the full year. But I hope that the situation will normalize soon, and the price will prevail at a normal pace.
What is the kind of subsidy that government would be providing to you? Is it entire 100% pass through for you in that sense? And with what lag does it come to you?
No, government has already increased 10% in NPK and as all these factors. So there is no problem as far as NPK fertilizer is concerned. We are in a process of recovering the cost by increasing little bit of MRP side also. As far as urea is concerned, government is providing the subsidy as per the natural gas prices, and natural gas prices is controlled. So there is hardly any impact on the margins of the company for the fertilizer segment.
How do you look at some of the raw materials like sulfur and sulfuric acid, which have been hit badly because of the Strait of Hormuz closure?
Yeah, that's correct. Sulfur prices have gone up like anything. It is just now at $850 per metric ton. Resultantly, sulfuric acid production and cost is very high at 30,000 rupees per metric ton. It has reached in the Indian market. So that is to be a cause of concern. Similarly, ammonia price has also reached up to the $1,000 per metric ton in the international market. But as far as the ammonia plant is concerned, we are running from the natural gas production. So that impact is not that hitting us as the direct purchase of the ammonia from the international market, because natural gas prices is still maintained at a better level, and we are producing ammonia in-house. So that will not impact that much as we purchase ammonia in the international market.
The IP portfolio, are you able to pass on the entire increase in the IP portfolio, or you're absorbing some of it?
No, in IP segment, as I said, that yes, I am in a position to pass it on to the customers, because the caprolactam benzene spread is good. Even in case of nylon, we are in a position to recover the cost increase in the benzene prices. Other like melamine, we are also tapping the export market, because in the European, whatever the FTAs signed by the government of India, that help us. And we are exploring the export of melamine, HF crystal, and other products which we can export. So we are realizing a good realization price in these products in the export market.
What are you penciling in from the monsoon, Mr. Bajpai? Because that will also determine how your customers shape up in terms of their finances.
Yeah, monsoon. Let us see and hope for a better monsoon this year. There is El Nino impact, and we have to see how the fertilizer market is going and how the farmer will absorb the prices of the fertilizer. But as overall, I am quite hopeful that fertilizer will be available at appropriate rate, because government is giving a lot of attention and cost relief in the case of fertilizers to the farmers. Still, there is no increase in the urea or DAP MRP, and all the burdens of the increasing cost is absorbed by the government of India. So in that way, the fertilizer market is not going to impact so much for the company as well as to the farmers also.
And what's the capex outlook looking like over the next couple of years?
Yeah, this year we have capitalized around 675 crore rupees projects, but in the next 1 or 2 years, there is some projects in hand. There is one stream of the DAP production which we are converting into fungible production. So we can produce APS and other NPK grade of fertilizers in the same stream. So that project is slated to be commissioned in July or August somewhere, and this year also. And the next PASA project, what we are going to put at Sikka only, and that will be taking around 1-2 years. So that 2 projects are presently we are looking. Apart from this, we are also putting certain facilities at our Dahej land what we have acquired. So the Dahej complex we will be developing in a very short time. So that project will be coming up in the next few years.
Mr. Vajpayee, with regard to raw material prices, I'm coming back to that point. And why do I come back to that is to try and understand how the unwind will happen. If, for example, there is a resolution, say tomorrow, hypothetically, what plays out in terms of demand, supply, pricing dynamics? Sulfur, sulfuric acid, from what I understand, are key components for you in terms of raw materials. What happens to those?
Yeah, ammonia price is very high. Sulfur and sulfuric acid price is also going to be skyrocketed to reach to $850 or so in sulfur in international market. But we are having some long-term tie-ups and contacts, and we are also trying to import the sulfur from the international market at a good rate. So by that way, we are procuring and arranging the raw material at competitive cost, which can be absorbed by the fertilizers like ammonium sulfate and ammonium phosphate sulfate. Because we are having phosphoric acid plant at our fertilizer complex, and rock phosphate is not that costly, and still PA is available at a very competitive rate for us. So APS production cost is quite competitive in the international in the market. So there is no problem as far as APS. But ammonium sulfate, as I told, that ammonia is produced in-house by the company. So ammonia prices are kept under control as the natural gas price impact is very low. So ammonium sulfate and ammonium phosphate sulfate, in both the cases, our prices of the fertilizers are kept under control, and we are having little contribution over them.
How are you managing your raw material inventory? What is the kind of inventory days that you have? And if tomorrow a resolution comes in, is there going to be an impact with respect to inventory losses?
No, inventory we are having the forecast of the prices of raw material. As far as PA is concerned, because we are importing PA for our Sikka complex. So PA is at a very reasonable price presently, what I understand. So we are keeping a good reserve of phosphoric acid. But as far as ammonia and sulfur is concerned, we are having a very little inventory, because these prices are very volatile in the market. And anyway, if these prices are less down, so we are keeping ourselves the levels of inventory as low as possible for us. So we are keeping the sulfur and ammonia inventory very low at our Sikka plant. However, in our fertilizer complex, we are producing ammonia, and we have 5 sulfuric acid plants. So there is no problem as far as inventory of ammonia, because natural gas is constantly received by us.
Mr. Vajpayee, thank you so much for coming in and speaking to us. Good perspective with regard to everything that's playing out, both West Asia as well as domestically.
Thank you.
All right, viewers, what we'll do is completely timed out on this edition of First Trade. So we'll wrap this show up. It's a thank you and a goodbye from Sajid, myself, everyone who puts this show together. But you want to stay with us. Plenty of corporate voices over the next 40 minutes here on ET Now. So stay with us. Plenty to contextualize.
A warm welcome. You've joined us here on Midcap Masala on ET Now. I'm Ashesha Advaryu, with me Snehi Shah, and we will talk about the markets in just a bit. But before that, we have the management of Vikrant Engineering, who is now joining us. Remember, this company had reported its numbers for the 4th quarter. Revenue saw a solid uptick of nearly 82%. The stock, in fact, is up 15% as we speak. We have EBITDA margins which have contracted a tad bit. They've come in at 14.2%. But what transpired in the fourth quarter and what the outlook is for FY27, to understand that in greater detail, we are now joined by the CMD of the company, Mr. Rakesh Markhetkar. Mr. Markhetkar, thank you for taking your time out and joining us here on ET Now. And first up, let's talk about the significant surge in revenue and EBITDA that you have reported for the fourth quarter. And first of all, congratulations on strong set of numbers. How sustainable is this high rate of growth as we head into FY27? And what are the factors, in your opinion, that will drive this kind of growth?
First of all, good morning and thank you very much. And coming to our financial FY26 results, it is as expected. Since after this, our IPO, we were very confident and that execution momentum has taken place. And then if you, even our order book has helped us. Our order book was very sufficient for our FY26 results. And even the current order book, what we have approximately 5,700 crore, that is for sure is going to help us further in FY27. So as far as the confidence of Vikrant Engineering, our confidence is concerned, we are very hopeful for the better execution, the way we are executing. At the same time, as I explained all the time previously also during our introduction, FY26 will be our turnaround. That is a very remarkable growth year, and FY27 will be far, far better than the current progress, because the current order book is more than 5,700 crore. And this order has to be executed in next mostly 12 to 18 months. So as I mentioned, our overview for FY27, we are maintaining to approximately 2,500 crore. So almost we will be doubling our revenue in FY27.
That sounds really good. In fact, Mr. Markhetkar, hi morning. This is Snehi joining in. My next question to you was on your order book, at 5,737 crores. You did say that 12 to 18 months is the execution timeline, but if you can help us understand what percentage of this order book will get converted into revenue in FY27 itself?
Yeah, see, the biggest order is from the solar side. Okay. That has to be executed mostly in the 12 months. So both the solar order, one is what we call it, that MSEDCL 969 megawatt, as well as for NTPC 500, we need to complete in this financial year itself. So this, out of that, 40 to 45% will get executed in this financial year itself. So this is this will be contributing around 60% of our that order book in this financial year from solar itself.
Okay, and Mr. Markhetkar, I wanted to go back to your FY27 guidance. You're saying that revenue will more than double to come in at 2,500 crores. If you can take us through the trajectory that you're penciling in for FY28 and 29, will this kind of growth continue going forward as well? What is the revenue visibility that you're getting at this point in time?
I will not be able to comment on it, FY28 and 29, but for sure, because of the current order book, if you see for the last 3 years, our the average growth is around 35 to 36%, which we have maintained continuously till FY26. Since we have a very strong order book and we are all set for the execution planning in the solar and the way we deployed our team. I'm just giving the example of this 969 megawatt solar power plant, which we have taken 100% stake in NOPL. So this will be the turning point. And not only for FY27, with this 100% takeover, that every year average annual revenue potential will be approximately 525 crore per annum, which will be resulting approximately 450 crore plus EBITDA margin, that is 80 to 85% every year, contributing alone by this NOPL project. So this is with very, very strong base and very strong confidence we are moving ahead now.
Okay, that sounds good. Mr. Markhetkar, your outlook is very robust. Let's talk about the solar opportunity. You did say that most of your order book focuses on the solar segment. The government is also pushing a lot for the solar segment, and we're hearing a lot of your peers going full guns blazing on solar pumps, solar rooftops. Talk to us about how you are looking to capitalize this opportunity in terms of the government's push for solar adoption.
We have taken a very bold step by acquiring this approximately 1 gigawatt and put together 1.5 gigawatt. The projects are under construction at our Vikrant Engineering Limited. So our immediate focus is to execution of this. Down the line, 6 months from there, though there is a huge potential for the solar, but we will be maintaining the track record of the profitability and selecting the project very carefully. Though there is a huge opportunities available, but we will be sticking to our own criteria of selecting the projects, the high profitable project. So we'll be maintaining that. So I'm very sure with this government initiatives and then that not only renewable, the complete green initiative, it is going to give us a lot of market overview, and then this is a good opportunity. And I'm confident after 6 months time, down the line 6 months, we will be able to select some more good projects in the solar.
Marketkar, since you're telling us that you're looking at profitable projects, what will the EBITDA profile look like, EBITDA margin profile look like in FY27 with 2,500 crore of revenue, with margins sustain about that 14-15% mark in FY27?
Yeah, we very confidently will be achieving 15% EBIT margin, that for sure, and approximately 7.8 to 8% PAT, as we almost in that same range. We are confident, and we have already booked this order for this profitability.
Okay, and Mr. Marketkar, before we let you go, we also understand that you're looking at some international exposure. Talk to us about which geographies you are planning at, and given everything that's happening on the war front, is that plan delayed right now, or is the geographical expansion plan on track?
As I mentioned earlier, also we are going very carefully. Sure. We are targeting Middle East and some African countries. Though we got opportunity, we are getting the opportunity. In fact, some order we got it, but we are not accepted because of the improper financial closure of that project. So because of the current situation in the Middle East, we wanted to go slow, very carefully. But that at the same time, we are exploring all the possibility to enter in a international market.
Okay. On that note, sir, thank you so much for your time. It was good to be speaking with you, Mr. Marketkar. It's been a very strong quarter and a year for you, and wishing you more success in the quarters to come. Thanks so much.
Thank you very much. Thank you very much.
Thank you. Okay, viewers, let's focus from one earnings candidate to the other. We've got the management of Century Plyboards joining us on the show. Mr. Keshav Bhajanka, the ED, is joining us on the show right now. Mr. Bhajanka, hi, morning, and good to be speaking with you. You know, very good set of numbers yet again for the company. Talk to us about how the quarter has shaped up for you, and more importantly, as you keep growing and as the base also keeps growing, can we expect to see this momentum sustain into FY27 as well?
Good morning. Thank you so much for having me on the show. I think, as you have rightly pointed out, it has been a very strong quarter and a very strong year. Overall, revenues have been up by 25%, and this has been cross segments. So, our plywood segment has grown by 18%, laminate by 16%, particle board and MDF by 30 and 100% respectively. So, I think that there's been very strong momentum on our side. As the base has increased, yes, challenges do increase, and growth on the base becomes that much more difficult. But on the ground, we are seeing fantastic traction. I think April has been our best month till date in the history of our company. So that bodes quite well for us. And going forward, I can see this growth momentum to sustain.
Mr. Bhajanka, morning, Ashesha this side. Since you're telling us that April has been a very strong month for you, can you quantify that for us? What kind of volume growth did you see in the fourth quarter, and what kind of growth are you now penciling in for the first quarter of FY27?
So unfortunately, we have removed guidance for the time being. The predominant reason being the Middle East situation. So, you know, there's a lot of volatility. Every day, something or the other seems to keep on changing. So at this point in time, we're not giving guidance. But what I can safely say is that the start to the year has been fairly robust. robust. And we are going to see, I hope, a very strong year going forward as well.
Understand that you are also seeing the impact of the Middle East war, and which is why the guidance has been withheld for now. But Mr. Bhajanka, on that note, also help us understand, have you seen any disruption when it comes to pricing? Have you undertaken any pricing action to try and mitigate some of this impact that we're seeing?
Definitely. I think we have taken multiple price hikes across a variety of our products. Plywood in excess of 5%, laminates in excess of 10%, MDF closer to 15%, particle board in excess of 10%. So, the basic impact has been on raw material prices in the form of resin, the chemicals that we are using, because most of them are internationally traded commodities that are crude derivatives. As you know, crude has seen a lot of volatility. Alongside that, our raw materials have also. So we are playing it by the ear. I think that as and when things change, we try passing on to the market. There's a slight bit of lag because the market also, our typical price increases are 2-3%. So such massive jumps take a little bit of time to stabilize in the market. But having said that, as of now, I think we have been able to reasonably pass on the increases. There could be a slight lag, but going forward, I think margins will come back within our guided parameters, say from next quarter onwards.
Okay, understood. Mr. Bhajanka, on that note, I just wanted to follow up. Now that you've taken price hikes to mitigate the impact and secure your margins, are you seeing any impact on demand, any reduction or any slowdown on that front now that the price hikes are at play?
I don't think so, because these price hikes aren't just for us. It is for the industry in general. So when the industry as a whole is forced to take a price increase, the normal base changes. So it's not that our competitiveness changes in any meaningful way. We would still be at a similar delta to competition, whether it is organized or unorganized, as we were before, just at a higher base level. So I don't think there has been any impact on demand. Yes, there could be a certain period of stocking, destocking as these changes play out, but that is temporary.
Since you spoke about price hikes, as a percentage of raw material price increase, how much has the price hike been, and will there be any impact on margins in the coming quarters?
I think there have been two impacts when it comes to core, face, paper. The basic impact has only been the change in the forex, the currency changes, which have been 2 to 3% over the course of the last couple of months. When it comes to resins, the impact has been close to 70, 80, 100% also, and it keeps fluctuating. So overall, as a base of cost, the price increases we have taken are largely in line to offset the same. So different products have seen different sort of raw material inflation. Like I said, MDF higher, plywood lower. It is difficult to quantify product by product, but overall, the increases have been predominantly driven by resins, and this impact has largely been passed on.
So the impact of raw material prices have largely been passed on, and there will be no significant impact on margins, is what you're telling us. Mr. Bhajanka, I wanted your understanding of how much you export to the Middle Eastern region, and has there been any impact on account of West Asia crisis on export demand to these regions?
Our exports from Middle East are negligible, so there has been no meaningful impact on us. Exports as an overall percentage of our turnover is close to 4%, and out of export percentage, Middle East would be less than 5%. So as a percentage of overall turnover, it would be in decimals of a percentage point. Having said that, there has been certain impact because containers have been delayed, there have been delays in shipments, so there has been rerouting because of this crisis. So some of those impacts play in, but that is about demand difference, or that is about supply difference. It is not about a change in the actual demand.
And Mr. Bhajanka, what about the plant that you're setting up in Odisha? How much will the capacity increase by, and when will it come on stream, and when will it ultimately start contributing to your revenue?
So for Odisha, it is an MOU at this point in time. We are still actively exploring. We have not finalized on Odisha, but given that the opportunity was there and we were able to get a time with the government, we have signed an MOU towards setting up a plant in Odisha. It is still under deliberation stage. So there's nothing concrete or finalized with regards to setting up a plant in Odisha yet. We had informed the board that this step has been taken. As such, we had to inform the stock exchange of the same.
Understood. So that's as far as capex plans are concerned. Mr. Bhajanka, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the fourth quarter looked like and what the outlook is for FY27. Thanks so much for joining us today. On that note, we need to slip into a very short break, but we will be talking to the management of Hindalco in just a bit after a short break. Masala right here on ET Now. And as promised, let's put the spotlight on Hindalco. This counter reported its numbers on Friday. We had Novelis, which reported its numbers on Wednesday, and that counter also reported a big beat as compared to expectations. And even when we talk about standalone numbers, aluminium upstream EBITDA reported a strong growth of about 13%. EBITDA per ton for upstream EBITDA rose by about 4% on a year-on-year basis. This is the highest ever that the company has ever reported. And as far as downstream EBITDA is concerned, we saw some bit of weakness over there. But we now have the management joining us, Managing Director of the company, Mr. Satish Pai. Mr. Pai, afternoon. Thank you so much for joining us today. And first up, let's talk about the strong set of numbers that you have reported. What kind of thoughts do you have on aluminium upstream EBITDA, which was the highest ever that you've reported so far?
So firstly, as you said, 5,448 crores upstream EBITDA at 48% margins are probably the highest Hindalco has ever had. Now, I do want to emphasize that these margins are, of course, driven by macro and LME, but you also have to take into account the very strong operational performance that the Hindalco smelters and refineries did. Going forward, if you look at Q1, the LME prices are already above quarter four. Of course, some amount of inflation of costs is happening, but it would be fair to say that our margins in Q1 will be better than in Q4.
Okay, that sounds good. Mr. Pai, we've spoken about the upstream EBITDA. Let's talk about aluminum downstream EBITDA per ton. That has declined by 6% as Aditya FRP plant is ramping up to its optimal levels. How soon will this plant ramp up be completed, and what will be the normalized EBITDA per ton? Then, what would that then be for the aluminum downstream business?
So the Aditya FRP is, as you said, ramping up. I think by the first half of this year, a large part of the operations would have stabilized there. I think that, if the demand holds good, we should be in that $250 to $300 EBITDA range. I think we exited at about 220, 250. So the downstream EBITDA per ton, we are hoping next year with the full ramp up will be better.
Mr. Pai, let's also talk about Novelis, because that reported strong Q4 despite the fire incident and its impact on shipments. One of the reasons was also improving scrap spreads. How much benefit will you enjoy as a result of improving scrap spreads as we head into the first half of FY27?
So I think that, scrap spreads, as you rightly said, have been quite good. Also, the LME and Midwest premiums have been good, so the scrap benefit has been good. But I think that, what we are really counting upon for improvement in Novelis performance in FY27 is the restart of Oswego, because once that plant starts, we will be fully delivering auto out of Oswego. And we are also looking forward to the start of the commissioning of Bay Minette in the Q3 of this year. I think for me, these two are the biggest and most impactful points for Novelis going forward.
Right. Mr. Pai, you did mention the Oswego plant, and that was earlier estimated to start at the end of June. Now it is expected to start in just a few weeks. How soon could it be? Can you help us with the timeline? Could it be in the first week of June itself?
It's likely to be in that first week of June, yes.
And now with the commissioning expected to happen in June, will shipments completely normalize in Q2 of FY27?
Yes. Our expectation is that within 2 months of the plant startup, we have to do a little bit of requalification. But yes, by the second quarter, Oswego should be back to its normal capacity.
And have insurance proceeds for Oswego fire already been received by the company? And will the claim also include loss of profit led by lower shipments too?
Yes, I think the insurance claim will cover all of that. We have been on record to say that the total impact of the fire has been about 1.7 billion, and that we will recover roughly 70 to 75% of that. The process will take about 18 months, is also what we have communicated.
And Mr. Pai, when we talk about Bay Minette cost escalation, that has been a concern for the street. No more cost escalation, right? If you can clear the air for us. And do you foresee any risk in meeting the commissioning timeline of the second half of calendar year 2026 that you have earlier given?
No, at this stage, we are quite confident that we will be doing the commissioning in the second half of this year.
And no cost escalation, right?
Yes, so far, no cost escalation has been seen.
All right, Mr. Pai, let's also talk about demand then. We believe beverage can demand is strong, and so is the demand from automotive demand when it comes to North American region. But what is hurting specialty demand? Is it a big headwind for you as we head into FY27? Could that be a concern?
See, specialty demand has been sort of flattish to weak for a while now because of the interest rates. Specialties is driven a lot by the building and construction market in North America, truck and trailers. So I think that this has been sort of flattish and remains flattish. So we'll have to see an uptick in the economy because the specialties are directly related to economic growth.
Okay. And Mr. Pai, free cash flow for Novelis has remained negative in FY26, and I believe you anticipate to return to positive free cash flow at the end of FY27. Now, given that some of Bay Minette capex is still to be incurred, what makes you confident of turning cash flow positive in FY27 itself?
So we have, just to be clear, we have said that in Q4 of FY27, we will turn cash flow positive because most of the capex spend will happen in the first 3 quarters, as well as our EBITDA and profitability would have then fully ramped up as Oswego is fully ramped, back in operation. So that's our confidence that by Q4 of FY27, we will turn cash flow positive. Though for the full year, we will be negative cash flow largely because of the Bay Minette capex.
Okay, and speaking of Bay Minette, Mr. Pai, from 4.1 times net debt to EBITDA for Novelis as on 31st March, how much could the leverage increase by, given that Bay Minette capex is still underway like we were talking about?
See, it's going to be a little bit variable. I think that at the end of each quarter, we should be between that 4.1 to 4.5. But we are also, again, confident that by Q4 of FY27, this net debt to EBITDA should start its downwards trend.
And any update on Novelis IPO now that the market has become conducive and Bay Minette is also on track to be commissioned in the second half of this year?
As I said at the beginning, the 2 most important things for Novelis today are to restart Oswego and get it ramped up, and is to commission Bay Minette. So I think that this is the 2 things we are focused on right now.
All right, Mr. Pai, thank you so much for taking your time out and joining us here in ET Now and sharing your thoughts on what FY27 could look like for Hindalco, both for India operations as well as for Novelis. Thanks so much for joining us today. But shifting focus then, economist Jeffrey Sachs warns that prolonged conflict in West Asia and sustained oil prices above $110 per barrel could trigger a major global economic crisis, with India particularly vulnerable due to its energy imports. He also cautioned that a severe El Nino event could worsen economic pressures through inflation and supply disruption. Here's an excerpt of that conversation.
The United States is a bully. The United States thinks that it can confiscate other countries' money, that it can tell other countries where to trade, that it can tell India whether or not to trade with Russia and so forth. Well, it's been limiting Iran's capacity to do normal economic business with other countries for more than 30 years. This is what Iran wants lifted. perfectly plausible. Is it likely? No, because the American mindset is the mindset of a bully.
Prime Minister Modi had recently visited the UAE. He was part of the Nordic summit. He went to Italy. The Indian government is also exploring some new economic austerity measures, if you will, because the prices of petrol and diesel have been going up because of the war. What is your economic outlook as you foresee for the next few months if the uncertainty and the war in West Asia continues?
Well, if oil prices remain at above $110 a barrel, this will be a significant hit to India and to the world economy. If the war escalates, or if the shortages that have been created intensify because nothing is relieved and the price of oil goes to $130 or even $150 a barrel oil, then we'll have a real full economic crisis. Unfortunately, the rest of the year is not panning out very safely because perhaps in addition to the current crisis, we're going to see a very powerful El Nino. By some forecasts, this is still probability and speculative, but by some forecasts, this could be the most powerful El Nino in modern times. That would be very disruptive for India as well in the coming year. We should all take care, be prudent, get the United States to go home, get the Strait opened, get the price of oil and gas down. This is what we should be doing.
Okay, that's the word coming in from economist Jeffrey Sachs in conversation with Times Network. But on that note, we're completely timed out on this edition of Midcap Masala. Thanks so much for tuning in, but stay on to ET Now because you have buy now, sell now that's up next.